New York City, I'm Julie Hyman, that's Josh Lipton, and this is Yahoo Finance Live. Here's what we're watching this afternoon. The countdown to the SEC's deadline to approve a spot Bitcoin ETF looming today at 5 p.m. Eastern, and issuers are already taking action. They're slashing fees in a bid to attract investors. But the hack of the SEC's X account, renewing concerns about volatility in crypto, will break it all down.
And the broader market on edge here as investors wait for key inflation data and peak earnings season to get underway. Tech stocks outperforming, and Microsoft is closing in on overtaking Apple as the world's most valuable company. This all coming as other big names in the sector announce layoffs and hiring freezes.
Plus, Alaska Airlines canceling all 737 MAX 9 flights through Saturday. The news following the first comments from Boeing CEO Dave Calhoun after a door plug blew off midair last week. We'll hear from a former FAA administrator later this hour. Let's get you up to speed on the market action right now on this Wednesday here. Things looking up a little bit from this sort of mixed to flattish picture we were seeing earlier in the week. Now all three major averages on the upside here, or at least the flattish picture yesterday. The Nasdaq rebounding in 0.9%, or I should say re-accelerating, since I think it was up by the end of the day yesterday. The S&P up 0.2%, the Dow up 0.5%, or 184 points. We've got communication services leading the way there. Meta part of that, which we'll talk about a little bit later. Consumer discretionary also gaining. Energy still lagging for another day today. We were just talking about Microsoft and Apple, by the way. I'm looking at the market cap for Microsoft at about $2.8 billion. Apple, $2.89 billion.
The race is on.
Yeah, it's pretty close there.
And Apple with a third downgrade, right? I think it's about the third in 10 days. Yeah, that's a trend to watch. You know what, Julie Hyman, why don't we start today with where we left off yesterday?
Yes, let's
I think
do
that's
that.
what we should. Talking Bitcoin, so we're waiting for the SEC approval of the spot Bitcoin ETF. Of course, yesterday, while we're on air, of course, this turns into sort of this headline-making cybersecurity debacle. The SEC's X account compromised, a fake post saying, yes, the agency did in fact approve the product. There was a really nice shot of a smiling Gary Gensler, right? It looked it was kind of SEC-like speak. But turns out, fake post. The SEC didn't approve it. It triggered Bitcoin prices, though, by the way. Yes. So some movement there. You spin forward to today, the SEC now saying, by the way, the FBI is on the case. They are investigating what happened here. And now maybe today we finally get a decision, and this time it's for real, with about a dozen companies applying to list these ETFs backed by Bitcoin.
Well, and then when all said and done, maybe it was just a sideshow, which is not uncommon in the crypto world or in the social media world, and when they cross as well. What we also heard about today was more information on the fees from the various issuers here, because there are some investors who say cheapest is best. They want to buy the one that has the lowest fee. And we heard from Steve McClurg earlier from Valkyrie, which is one of the issuers. He talked about what he thinks the outcome, or how the fee war, so to speak, is going to go.
By the way, I don't think the fee wars are over. I don't think that we've fully announced what we're going to do yet. This isn't like a typical index ETF that you see where it's a very simple product. You're buying ETFs, it's passive, you're holding it at a simple custodian. No, this actually takes a little bit more because you're dealing in Bitcoin. You've got two custodians. For us, we use US Bank and we use Coinbase. So you have to not only take in cash, but you have to buy Bitcoin. You got to transfer it over to Coinbase. So there's a lot of cybersecurity measures that you have to take. If your fees are too low, then that means that you probably aren't taking adequate security measures. So we're really focused on the security, the trading side of things. We're not going to be the lowest, but we are going to be competitive.
So, in other words, what he's also sort of explaining is why you're getting low fees, and you're getting some of the bigger firms in particular waiving the fees for the first 3 or 6 months, but you're not getting the bargain basement fees you would get on, say, an index ETF, because there are some costs associated with managing these products. The other thing I think we need to point out that McClurg also talked about, and other guests we've talked to, like Samir Karbaj of Hashtags yesterday, it's not like when they do get approved, the switch is going to go on and money is just going to pour into them. Right. Yes, there will likely be some amount of money that will go into them, but it'll be a process of adoption through the army of financial advisors across this country that might start allocating some resources to this.
And that process of adoption is just going to be fascinating to watch. I mean, what is, I don't mean right away, but over the near to intermediate term, what does demand look like? Where does demand really come from? Is it the advisors, retail, institutional? If you get the approval, what is that really sort of the positive catalyst? We've been talking a lot about that, or is it going to kind of shake out to be more of a sell the news event? Lots of interesting trends to watch.
What I will say that we have learned writ large when it comes to crypto, the most important catalyst is price. Number go up, other people buy. That's the way that it has tended to work. So that's likely.
We'll be watching.
We'll be watching. All right, and we've got more crypto coverage for you on this Wednesday morning. Brief anchors. Shauna Smith is going to join with Coinbase CFO Alicia Haas. That's just after 5 p.m. Eastern, when we might be getting some headlines on these approvals. We're going to be here for that as well. Well, after a strong end to 2023, stocks have stumbled somewhat in the new year. The market's next big test comes later this week. Fourth quarter earnings season kicks off Friday, providing insight into how companies are thinking of the year ahead. Our next guest says there's good reason to perhaps be cautious. Joining us now, Chris Harvey, Wells Fargo Head of Equity Strategy. Chris, did you think we were going to start you on the Bitcoin ETF? No, just kidding. So let's talk about earnings season, though, and how, even last year when we were talking about a possible earnings recession, stocks still went up. So what are we expecting now?
So what we're expecting good news as we go forward. But you've had a great 12 months, right? You're coming into the new year. You don't want to set the bar too high. You'll want to manage expectations down. You want to be able to beat those expectations going forward. So we do expect a fair amount of volatility, and we do expect expectations to come down somewhat, right? And what we've seen over the last couple of weeks is the macro's been great, but when we get to the micro or the idiosyncratic, the reaction function hasn't been too positive. You look at FedEx, you look at Nike and a few others, once you start talking about the fundamentals, the stocks haven't performed as well. So we're a little bit concerned that you could see a downdraft as companies begin to manage expectations and talk about 2024.
And Chris, another theme I'm interested in with this earnings season, I'm just interested to get your take on this, is China and how you sort of hear CEOs, CFOs talk about that. China is shaky, and there's so many American companies across so many sectors look at China, those still as a really important end market. I'm just interested how you think about that and how much that kind of might pressure results.
It could pressure results. However, China's been shaky, as you point out, shaky for some time. A lot of people play the reopen, but after the reopen, things haven't been so great. And everyone's waiting for China basically to get out of its own way. It hasn't yet, but the bigger picture, rest of the world, US is in a lot better shape than the rest of the world, including China. And anyone who has overseas exposure in the here and the now, that's not great, but as we go forward in time, I think that'll be better. And I think people will rotate to rest of the world as we get through 2024.
Also sort of tied up with the China story is the inflation-deflation story, right? That the talk that China is sort of exporting deflation in some sectors. How is that going to feed into earnings as well? And then I imagine it's going to be sort of sector-specific.
Yeah, I wouldn't say it's so much China-specific. One of the things that we keep talking about, one of the things we keep seeing is that the pricing power you had 12 months ago, 6 months ago, not the same pricing power that you're going to have 6 months from now or in the here and the now. We've had the supply chain normalize. We've had supply and demand come back into line, and you just don't have that same pricing power. And I'm not really sure the market, that's the other thing we worry about during earnings seasons. I'm not really sure people really appreciate that pricing power has come down, and I'm not sure the stocks reflect that.
But at the same time, are you going to have better spending power on the part of consumers if inflation is coming down?
You would think so, but we're not seeing that just yet. What we're seeing is pricing is coming down, and you're still seeing a contraction in some parts of the market or univolume for things like staples, parts of industrials, chemicals, commodities, so on and so forth. So you're not seeing that reaction function. They're not as elastic as you would think them to be.
And Chris, beyond just this earnings season, as you look kind of further out across 2024, what does corporate earnings growth actually look like to you? How much growth are you looking for?
So we're looking for mid to high single-digit growth this year and next year. One of the things that we worry about the market is we have a 250 number for 2025, and we're trading at 19 times that. Right? What the market's telling you, or what the market seems to be implying, is growth is going to be a lot better. One of the issues that we have is we never had, people tell me we had a recession. Obviously, I missed that, right? And if you don't have that recession, right, it's hard to have that big recovery. And so we're worried that there's just a little bit too much optimism around the Fed and around earnings. But we do think earnings do go higher from here. Just expectations are a little bit too aggressive, I'd say.
So all said and done, you're at 46.25 for the end of the year. That's lower than we are right now.
That is, yeah.
So where do you go if you want to do better than that?
So where you go, what we've said about this year is you really got to trade. This is not a year that you want to buy and hold, right? You want to trade around. On a sector basis, what we want is some of those big media companies, right? So we like the communication space. We have liked the communication space for some time. Big GARPy names that are working right now. But we also want to balance it out with something a little bit more risk averse. If you look at utilities, you look at healthcare, they were beaten down last year, good valuations, and we want to balance out that growth with something a little bit more defensive, because we do expect with the VIX at 13 and volatility, and everyone's certain about the path going forward, there's going to be a few bumps in the road, and that's going to protect the portfolio.
And just growth at a reasonable price is GARP, for people who don't know what that is.
What about tech, Chris? Still a fan of that in 2024?
So within tech, what we want is we want to be overweight software and underweight hardware, right? That's working out.
How come, Chris?
So the reason being is software is we're a little bit more conservative. Software is a little bit more stable. It's a little bit lower risk. And the technicals are telling you that this is a good time to get into software versus hardware. That's working out. The first couple of days of the year, we were helped out by some downgrades of Apple. Mm-hmm. But overall, we just like the return proposition, the safety and the consistency of software, and hardware valuations and the underlying fundamentals just don't look great to us.
Chris, one of the other things we've been asking a lot of investors about is the election.
Yep.
And I'm sure that's a question you're getting from your clients.
That's a good eye roll from Chris right
yeah,
there.
right? I mean,
here we go.
But I mean, okay, as an investor, purely as an investor, what do you do around it? Or do you just can you ignore it? Should you try to ignore it? Okay.
Well, here's a good thing. What we looked at is we look back at different presidents, Democrat, Republican. We looked at Senate. We looked at the House. And the most important thing for the equity market is who controls the Senate. Right. And if the Senate is controlled by the GOP, that usually goes with better returns to the stock market. The president, it's a little bit more murky. And if you look at some of the races, it does look like the GOP has a decent chance, maybe a coin toss, better than a coin toss chance of winning. So we would tell you that there's going to be a lot of entertainment on the presidential side, and we can't handicap it. But if you're looking as an investor, focus more on the Senate and those Senate races, because that's really, and if you do see the GOP starting to gain some ground, that could be a late year catalyst for a number of things, including M&A.
All right, so enjoy the entertainment maybe.
Enjoy the entertainment.
Focus on a portfolio on the Senate. Chris, thank you so much for joining us today on Set. Appreciate it.
Thank you.
Next up, let's get to some today's top trending tickers. I'm going to start here with shares of Paramount. They're basically kind of just flat right now, slightly down. That's after a Wall Street Journal report that Skydance media investors are in talks to gain control of Paramount's parent company. If successful, investors would then reportedly try to merge Paramount Global with Skydance. So this one was interesting, and a name we've actually spoken a lot about. And some interesting characters in here as well we have to talk about. So we know Sherry Redstone, whose family, obviously, they control Paramount Global. She's received interest, right, for the movie studio. What I think was different here in this wrinkle is the Journal is saying that Skydance Media CEO David Ellison is now talking about this sort of all-cash bid for Paramount's parent, National Amusements.
Right.
How will David raise the money? Apparently from Skydance investors. And Dad will also apparently help out as well. Dad, in this case, being billionaire Larry Ellison.
Right. I didn't know about the Ellison connection.
You didn't see the resemblance there? Really? No, you don't see it.
Yeah, now that I look at the picture, yes, I do see it. But, what's interesting is that Paramount is obviously very much in play. And it seems like it's kind of up to Sherry Redstone what she wants to do with this. And she doesn't seem in any rush to get it done, because we've been talking about it for a couple months now and what might end up happening with this. It's also interesting to me that Paramount shares, I think that they moved on this report initially, and when we just showed them, they're not doing much. Not doing a heck of a lot right now. There you go. You got a little spike on that news, and then they went right back down. So I don't know if that means that the market doesn't think this is likely, that they don't know what to make of the parent company potentially being in play? What would be the implications for Paramount? I think we still have a lot of questions.
Well, we've had different headlines on this too. Remember, it was David Zaslav, of course, CEO of Warner Brothers Discovery, because we had those reports just last month that he was meeting with Paramount CEO Bob Bakish, discussing the merger too. So a lot of different headlines and reports here.
Yeah, well, let's talk about Meta also. I mentioned communication services higher today in part because of Meta. Mizuho analyst James Lee raising the price target on the tech giant from 400 to 470. He does say maintain a buy rating. And by the way, just by way of context here, the average price target on the stock is about 385. So he is way above where the street is on this name. And among other things, what he's looking for here, he likes messaging, which I thought was interesting. He says messaging is an attractive optionality and that WhatsApp could incrementally increase Meta's revenue base by a third over time. So that was an interesting part of his thesis about the company.
Yeah, very interesting. You know what I was more interested in today, though, if I'm being totally honest? Zuck posting on Facebook.
About the cows?
Love the cow post. Shared a post on Facebook, says he's now started raising cattle on his Hawaiian ranch on a diet of macadamia meal and beer. All grown and focused on his ranch, by the way. He's keeping it local. And I love this version of Zuck. It's Hawaii, it's raising cattle, he's challenging Elon Musk to cage fights. It's a brand new guy in charge over there.
I'd really like to know what a drunk cow is like.
Do you get drunk on beer? I don't know.
Of that size?
I don't
an
know.
Animal of that size?
I feel like that would take a lot of beer.
They process food differently, so I don't know. Like through the stomachs, does the alcohol even get to them?
And why macadamia meal?
So obviously, should we be booking like an animal husbandry expert now to speak
I'd
about
rather
these
be booking a trip to the Hawaiian Zuckerberg estate. This is,
I don't know if that's on the cards for us, Josh.
Aim high, Julie. Finally, Intuitive Surgical. Let's get to this one. Last ticker, rising higher today after the medical equipment maker reported preliminary revenue for the fourth quarter that topped estimates, coming in at $1.93 billion. Street was closer to $1.87 billion. So, by the way, Intuitive Surgical hits a 52-week high in today's trade. Medical equipment maker. This was preliminary revenue for Q4, but they beat what the street expected. They are scheduled, by the way, to formally report these results, I guess, on January 23rd. 19 buys on this one, 11 holds, 2 sells, and sounds like analysts were broadly liked what they heard today.
Mm-hmm. Yeah, some of the analysts, like Stifel's Rick Wise, saying if you go back to 2015, the company's initial procedure growth guidance range has actually been conservative. So you're looking at this forecast today, the street likes it, but even some on the street view it as low and that they could come in and beat here. I mean, so another thing to point out here is that Intuitive Surgical was really kind of a pioneer in the surgical robot business. And so analysts like those over at Leerink are saying that basically the fact that it has been first to market creates high potential switching costs for hospitals. In other words, if you've got the Intuitive Surgical, if you've got their Da Vinci robots, then it's difficult to switch away from that system to something else.
Yep. Well, it's one to watch, certainly.
Yeah, most definitely. It was up 27% last year. And that 52-week high that you mentioned, I don't think it's quite a record high, if I'm not mistaken, but it has done well, certainly, over the past year. All right, we're just getting started here on Yahoo Finance Live. Coming up, Boeing facing increasing scrutiny after a door plug blew off a 737 MAX 9 jet mid-air. We'll speak to a former FAA administrator about what comes next for the plane maker. Plus, Yahoo Finance's Akiko Fujita is at CES 2024 in Las Vegas. Later in the hour, she'll catch up with Intel Auto VP and GM Jack Wiest about the company's automotive chip efforts. And we've got extended crypto coverage for you this afternoon. Yahoo Finance's Shauna Smith will speak with Coinbase CFO Alicia Haas just after 5 p.m. Eastern. That is when we are expecting to get potential approval for the spot Bitcoin ETFs. We'll be right back.
The World Economic Forum identifying severe risks to economies and societies in its latest global risk report. In the short term, as political dynamics take center stage, misinformation and disinformation take the top spot for the most global severe risk. As the online arena braces itself for a wave of misinformation, our next guest says there's a heightened risk for top brands. Joining us now is DoubleVerify CEO Mark Zagorski. Mark, always good to see you. I want to start actually, Mark, listen, it's January, we're starting a new year here. Just kind of at a high level, Mark, I'm actually interested to just get your take on, get kind of a health check on the online ad market. How strong a year do you think it's going to be, Mark, for the online ad market? What are the headwinds and the tailwinds you see?
I can definitely see it's a different attitude coming into 24 than we saw in 23. 23, there was severe fear of recession. There was kind of a dour feeling, even at CES where we are today. We're kind of saying, when is this going to hit? When's that shoe going to drop? And, I think that's changed quite a bit. I think the feeling now is, hey, we may make it out of this okay. I think advertisers, not that they're, blowing, all their cash on ads these days and saying it's a different world, but they're not as worried, I think, as they were last year. So I think we're going to see a better ad market than we saw last year. I don't think it's going to be a boomer, but I think we're certainly emerging from kind of the feelings that people saw in the end of 22 heading into 23, where there was just kind of a severe amount of negativity.
How concerned are the advertisers you're working with about being next to disinformation, misinformation, or just things that are tonally not what they're looking for?
Yeah, a core part of what we do for some of the biggest advertisers in the world is ensure that their spend in their ad placements aren't next to content that they're not comfortable with. And that can include everything from brand safety and suitability violations to what you mentioned, which is content that they consider to be hate speech or misinformation or disinformation. Because what we found is consumers create a direct relationship between where a brand ends up and the kind of content that's around it and their perspective on that brand. So it has a negative rub-off effect. They're very concerned about it and increasingly concerned about misinformation and disinformation, as well as hate speech during years like this year, which is an election year. And election years see heightened levels of all of that type of information or lack of information throughout the web.
And so, Mark, so they are concerned about it, your clients. What are some solutions there? What are you telling them? Our goal is twofold. The first is we want them to avoid the content altogether, right? And we do that through specific filters, through programs that we work with on certain platforms that allow them to avoid content that we believe and flagged as not being aligned with who they are and maybe misinformation or disinformation. So the first thing we try to do is keep them away from the stuff. The second is ensure that if their content or their ads did end up there, that there's an opportunity for them to rebuild a plan in the future that doesn't involve those properties. So I think, we have tools out there across social networks, across the open web, across connected television that allow them to do that. Those are the places where they fear being the most.
Mark, when advertisers are looking at the choices of where to advertise, are there places that they are just avoiding because they don't want to deal with this? I mean, we know a bunch of advertisers said they left X at one point. Typically when that happens, they kind of trickle back. Are they trickling back or are they still avoiding it and going elsewhere?
Yeah, I think that's the last thing we want in the ad ecosystem is advertisers just turning off platforms, right? Because they don't have the ability to use a scalpel instead of a meat cleaver, for lack of a better analogy. We are seeing less of that because the tools that we're able to build and others in the space are able to build allow them to maneuver a little bit more finely because there's no platform that's all bad in general. There's good content that could be found anywhere. We just have to help advertisers kind of find that good content and be around that stuff as opposed to the stuff they're not comfortable with.
And Mark, one other change I want to talk about with you here, it could be a big one, obviously, is Google, by the end of the year here, Mark, planning to eliminate cookies for Chrome users. Are marketers or advertisers, are they ready for that?
I guess they don't have a choice, right? It's coming whether they like it or not. And I think there is going to be a universe now where, in most cases, advertisers are going to be looking less at the who and more at the what and the how and the where. So I think tools like contextual advertising. So we're bringing back, buying content as opposed to buying users. New metrics like attention measurement. So not measuring, individuals and tracking, individuals based on cookies, but a level of exposure and engagement and what draws attention. I think you're going to see new metrics evolve to take the place of the old metrics of targeting users. And I think that's a good thing. It's good for privacy. And I think what we've shown, what we've been able to show through some of our tools is that the efficacy of context, the efficacy of attention is just as powerful, if not more powerful than what was used in the past, trying to target users based on cookies or identifiers.
Mark, great to see you. Thanks so much for taking some time out from your busy CES schedule to spend with us. Appreciate it.
Absolutely. Thanks for having me.
Stocks posting modest gains across the board today, but nearly 24 names in the S&P 500 are hitting new highs. Jared Blickery, I'm so glad that you're highlighting this. I noticed this morning just seeing a lot of that crossing the tape, 52-week high, 52-week high, et cetera.
You bet. And this is only the record highs, 52-week highs. We got a much bigger board here. But let's just kind of take in the broad swath of sectors and industry groups that this represents. So you have Nvidia up 2% today, another record high. Nvidia was a leader 1 year ago. But then you take a look at healthcare. Eli Lilly with its weight loss drug that has been just soaring over the last year. Healthcare has actually emerged recently as a favored sector, whereas last year at this time it was lagging. It was in the red. Then financial-wise, we have JP Morgan at a record high along with Visa. By the way, JPM, I think it hit it 2 days ago. So all of these are within the last few days. But then we also have staples, consumer staples, Costco, that stalwart, hitting a record high as well. And let me use this to transition into something I've been noticing here. I mentioned healthcare has been leading year to date. So has utilities. Those are the top two. Then you have communication services. All right, that has Alphabet, that has Meta, and some other names. But then here's staples and financials. For the most part, this is a defensive setup. And we were talking to Mark Newton over at FundStrat. He's a managing director there earlier today about what he expects for the new year. He did like healthcare, but I thought interestingly, he also likes energy, tech, and industrials. Energy is a new entrance to the game. And let me just show you some longer term charts here. I'm going to go to a max chart of energy. So this just shows we basically have, going back to 2007, a triple high that energy needs to break through, and that could take some time. We see a lot of consolidation here, but if and when it eventually does, wow, you can imagine the liftoff that it might have. Then you take a look at healthcare. This is also another long-term consolidation, and you can really see that in the 5-year here. If this breaks above, there's a lot of room to go. So this is the kind of thing that we're going to be looking for in the new year. We had a lot of bullish action over the last 2 months that spread out to the whole market, and now we're looking for some continuation.
Jared Blickery, thank you for that. Appreciate it. Coming up next, the airline industry under some serious pressure following the latest setback for Boeing. So what comes next? We speak to a former FAA administrator on the other side. Stick around.
More than 170 Boeing 737 MAX 9 aircraft are still on the ground after the Federal Aviation Administration ordered airlines to ground the planes to conduct inspections. That was on Saturday following a door plug failure on an Alaska Airlines flight Friday night. Boeing CEO Dave Calhoun saying, quote, a quality escape occurred. He made those comments earlier today on CNBC. Joining us now is Billy Nolan, former FAA administrator and Archer Aviation Chief Safety Officer. Billy, thank you so much for being here. When we look at the FAA investigation into this, what can we expect? How does this sort of play out, and what are the steps that the agency follows when it's looking into an incident like this?
Yeah. So first of all, thanks, Julie, for having me on today. You know, the first thing that happens in an event like this, which is either a serious incident or an accident, the National Transportation Safety Board is on point to lead that investigation. The FAA is a part of that investigation, as well as Boeing, the airlines, labor, the pilots union, the flight attendants union. They are parties to the investigation as well. So we're about 5 days, as you mentioned, we're about 5 days into this investigation, and it's still in what we call the fact-finding phase. That being said, the NTSB is starting to have at least some theories. It feels like they're netting out on, was this a process failure or a quality escape, as Dave Calhoun referred to that, in either manufacturing, most likely not, because there are lots of airplanes flying around the world that have plug-type doors, and this is the first incident of its kind. So it feels like it leads into it being a manufacturing or an assembly issue. So I expect that the board will continue to focus on both Spirit AeroSystems and Boeing and say what happens from the time that this fuselage is delivered to Boeing as they complete the fit out in terms of putting that all, putting the airplane back together and make sure that all of those quality steps are taken. Now, that's the job of the NTSB to get to the bottom of what happened. Now it's incumbent upon the FAA to say they have issued this emergency airworthiness directive that they initially had out on Monday night that's now being revised, and that the FAA is in the process of reviewing and approving, that says, here's how you go about inspecting this 170 grounded MAX 9s, right? So that process, as we've already heard, will take somewhere between 4 to 8 hours, depending on the airline and the number of folks they have to get that work done. So I know that they're keen to get these airplanes back in the air. But as the FAA stated, they will not do that until they are completely satisfied on an airplane by airplane basis that the safety case has been totally made and all of the inspection criteria has been met.
And let's say, Billy, as you point out, listen, the investigation ongoing here, we're still trying to determine root cause. If it was, though, Billy, manufacturing assembly, what would be the remedies there? What would the FAA ask to be done in response to that?
Well, you go back and look at it, and but Dave Calhoun made a good point, right? He says, look, there's this mantra about safety first, quality always. And so when you hear the word a quality escape, either was that a misstep or was there a final inspection? Again, I'm hypothesizing here that wasn't met. So Boeing will go back and take a deep dive look, and it's going to be incumbent upon the FAA in its oversight role. And I know, I'm sure you're aware, but the FAA has a strong oversight team there that with Boeing all the time. So I expect this will be some increased level of surveillance or oversight, if you will. So as we continue to work to get to the bottom of this, and the challenge will be for Dave Calhoun and his executive team, how do they continually reinforce this culture of quality that makes sure that every airplane that flows off the assembly line is without defect, and that the public can expect that it's as safe as Boeing is able to make it.
Billy, for those of us who have been following the company for a while, obviously we have seen some of the other issues that Boeing has had with safety over the past several years, and there's been a lot of criticism of them. Equally, the FAA, one would think, maybe should have caught some of this stuff. So I guess the question is, where does the blame lie when something like this happens?
Well, at first, really good points, Julie. First and foremost, let's get through through the course of the investigation itself. So I think that the NTSB has the door itself, the plug door, in their in their Washington offices. So they're working through what that analysis will reveal. Were the boats attached? Were they stripped away by the force of the rapid decompression? So all of that is in play. It's an opportunity for Boeing to go back and look at all of its procedures, and as well as the procedures that it oversees Spirit Aerosystem. It's another opportunity for the FAA to say, hey, is there anything that we've missed as an agency? I can assure you, during my time as acting administrator, I know Michael Whitaker is doing exactly the same thing. These are the questions I ask your team. Have we missed something in terms of how we oversee? Now, the FAA has beefed up the number of inspectors that it has assigned to Boeing and to other OEMs, and it has beefed up that level of interactions. And there's still some authorities that the FAA has yet to give back to Boeing. So this is a process of working through this investigation, see what comes out of it as from an approximate cause of it and what might be the contributing factors. And then we'd ask ourselves, okay, is there anything else that we need to do different to make sure that this doesn't happen again?
Billy, the airline industry, it's been a rough start to 2024, right? You have these planes colliding in Tokyo. Billy, now we have this mid-air mishap. Some folks might be watching this right now and just getting concerned about flying. If your friends and family asked you, Billy, about that, what would you say about whether it's still safe to fly?
It is absolutely safe, and I can say that without hesitation and categorically. On any given day in our national airspace system, we've got something between 45 to 50,000 flights per day that all day in, day out, 14, 15 hours a day, go back and forth to their destination. And you're carrying on average of about 2 million Americans per day are in the air flying at, almost at any given time. So, this is very safe. That being said, Josh, it is always good for us to step back and say, number one, neither safety nor quality can ever afford to take a day off. The consequences are just too dire, right? So this is an opportunity to say, hey, what was missed here? How do we make the system even safer and even more robust than it is today, thus ensuring the American people and the flying public that not only is the FAA, safety is their North Star. And then for Boeing, for them to take a deep dive and say, okay, we've got to get back to what really made us one of America's greatest companies, and let's not have this happen on our watch ever again.
And Billy, I want to get you here out of here on this question. I've heard, Billy, some folks make the argument, former regulators who say the issue here could be broader. And what they say, Billy, is that the system, in their opinion, is under a kind of pressure, a kind of strain, in that you have this huge demand for traffic, they say, but at the same time, the labor pool is tight of qualified, experienced pilots, air traffic controllers. What's your take on that, Billy?
Yeah, I would say we do need more trained and certified air traffic controllers. The FAA needs a consistent and steady funding stream. That's before the Congress right now. So that's another one that they need. We are seeing, as you look out and you look at the outlook, that we will need an incredible number of pilots, an incredible number of aircraft maintenance technician, flight attendants, the whole ecosystem. We're back to this. We've surpassed already where we were pre-pandemic, right? So the world is back flying, and they're back flying in a big way, and the projections are there. So does that provide a little bit of stressors into the system? I think it does, but there's a lot of work ongoing, not only within the airlines themselves, within the OEMs, be it Boeing, be it Airbus, Embraer, et cetera, but also in the halls of Congress and within the administration that says, what is it that we need to do to make sure that America retains its lead that it has always had, and when it comes to air transportation, and make sure that we have covered all of our bases so that we're not having these kind of conversations where something has happened that we really did avoid having this be something very significant and, could have been, something a lot worse.
Yeah, here's hoping we don't have cause to talk to you again about this kind of stuff anytime soon, Billy. Thank you so much. Really, our viewers are going to benefit from your expertise. We appreciate it.
Thank you, Julie. Thank you, Josh. Appreciate having me on today.
Coming up, we're sending it out to Las Vegas as Yahoo Finance's Akiko Fujita takes a closer look at how Intel chips are being used in cars. Stay tuned. You don't want to miss it.
Yahoo Finance is out in Las Vegas for CES 2024, catching up with some of the biggest names in tech and talking what's next for AI. Akiko Fujita spoke with Jack Wiest, Intel Auto VP and GM, about the company's automotive chip efforts and the future of AI PCs in the car. Take a listen.
This new lineup of products brings the best of the AI PC and all the reliability of the data center into the vehicle, so automakers can evolve their architecture away from fixed function to software-defined and dynamic architectures going forward.
So how does what Intel's announcing change the way these EVs are structured?
So what it means for an automaker is before you'd kind of design a car around an engine. Now you can start with a battery and a computer and build the rest from there. And so it really frees up their opportunity to do some really unique things. So one of the other things that we announced this week is that we're also going to be the first supplier to deliver a chiplet-based product for the automotive industry and allow our customers to integrate their own custom chiplet inside of our products.
What does that mean?
So what that means to an automaker is if you've got some special, let's say, AI algorithms inside your company, or you really want to do something truly custom and differentiating that only that automaker's brand will have, in the past, you'd have to build a fully custom chip, which is incredibly expensive. With a chiplet-based approach, the automaker can develop just a small chiplet, and we will integrate that into our product and then deliver it back to them. So it's kind of a hybrid custom approach where they get the benefits of a fully custom differentiated piece of silicon, but at a fraction of the cost.
Fraction of a cost. What are we talking about in terms of where it is right now versus where the cost can be?
Be about a tenth as expensive as building a fully custom.
1/10.
1/10.
What about from a user perspective? How does the experience change for the driver?
So what it means for consumers is they're going to be able to enjoy a bunch of new kinds of experiences in the vehicle that they've not enjoyed before. So we announced this week with Zeekr, a leading Chinese electric vehicle maker, their new living room experience powered by Intel's new software-defined vehicle products. And so what that brings is AI capabilities. So you can have a conversation with a generative AI voice assistant. It means you can play high-end PC games, productivity applications, video conferencing. It's really a mobile living room or workspace on wheels.
We have been seeing this transition in cars from just sort of cars as we see it to machines on wheels, right?
Yeah.
I mean, what does that ultimately mean for Intel, the opportunity you see given just how electrified and digital more and more of the car experience is?
Yeah, I think you said it. With everything becoming more digital, the opportunity for companies like us who provide products that process all those digits becomes even bigger. We estimate that currently silicon as a percentage of a vehicle's bill of materials is only about 4% of the total cost. By the end of the decade, that will be 20% of the vehicle's bill of materials will be spent on silicon.
One of the other things you've announced is this ability to manage power more efficiently. I would tell you as an EV driver myself, that perked up my ears, right?
Yeah.
How does it work?
Yeah, so we announced a definitive agreement to acquire Silicon Mobility, which is a company with an innovative power energy delivery system that can deliver significant enhancements in the efficiency of power delivery. So imagine a battery that's 30% smaller or range that's 30% longer. That's what we'll be able to do with that technology. But more, if we combine that with the rich contextual information that's inside the car, such as who's driving, what's the weather outside, where you're going, we can now make energy management much more intelligent where it is not today by combining all of that information together to give you more accurate range or to make sure you get to your destination because we can turn off other things that aren't being used to conserve energy. So it's really about bringing intelligent energy management to the car and taking a whole vehicle platform approach in terms of how we manage that energy source.
So given everything that you have described, the further integration of chips, software in these cars, when you think about Intel's business overall, I mean, so much of it is driven by devices, PCs. Autos itself, how big of a revenue driver can it be? How much bigger is that pie going to get for Intel?
Yeah, we think it could be huge. So when we looked at a different industry that went through a similar transition, think about smartphones. Where we went from feature phones, which were fixed function, lagging node, to smartphones, which were really software defined and leading node. And so in 2010, about 20% of the market was smartphones. By 2020, 80% of the market is smartphones. We estimate today about only 20% of the vehicle market is software defined or electric, and in 10 years, 80% will be. So we're about to see the same explosion of growth opportunity for Intel in this space, and that's why we're positioning ourselves to be able to help the industry in this transformation. So here we're showing what would be a vehicle. You've got a digital instrument display cluster, you've got an e-mirror, the front passenger might be enjoying a game, you've got a navigation app, and then up here we're showing 4 additional displays that you might imagine in the rear seat of the car, where perhaps one of the kids is watching a movie and another one is playing a game. Up there in the upper right, we also have a conversational AI assistant. So bringing AI into the car and letting people talk and have a conversation with their voice agent. So all of this is running on a single product.
Is this how many screens we're going to see in cars in the future?
We have requests from automakers for 12, 14.
In a car?
Everything is becoming a display.
Wow.
And eventually you'll think about your windows as transparent displays. Think about a kid playing a game in the back seat where they're looking out the window, touching the screen with a transparent display. So amazing things are coming in cars because of this technology.
And when are we going to start to see this integration in cars that are on the market?
This product here will commercially ship this year and the end of 2024. So in the next couple of years, you're going to start seeing vehicles in the market that have these capabilities.
And what does the future car look like? Or what is the experience inside the future car?
I wish I knew, but I think what it's going to be, I think it's going to be more personal. I think it's going to be more predictive and understanding our needs and wants. and it's going to be a lot more intelligent, whether it's a more accurate range estimation or it's giving you better rerouting advice on your trip. It's going to be a lot more enjoyable experience.
That was our own Akiko Fujita and Intel's Jack Wiest. Well, JP Morgan kicking off earnings season on Friday. The street is expecting record annual profits, but are less certain about JP Morgan's year ahead. With more, we're joined by Yahoo Finance's David Hollerith. Hey, Dave. So is JP Morgan going to be able to keep it going?
Yeah, I mean, it's going to be hard to top this year. They're expected to come up with $49 billion in profits for 2023, which breaks the previous record set for the industry by JP Morgan. But it is kind of the latest sign just to show that JP Morgan is the biggest bank, and it's starting to break away from its big bank peers in terms of its profits. The bank is, again, expected for the year to come up with about $20 billion more in profits than Bank of America, the second largest, double that of the profits of Wells Fargo, the third largest, and then quadruple Citi, the fourth largest bank. But as far as quarterly results go, it kind of looks like a sour quarter for the big banks, comparatively speaking. They're all going to be paying, most of them at least, are going to be paying a one-time charge to the FDIC, and that's for covering the losses that the FDIC paid for with the failures earlier this year, the bank failures, excuse me. But as far as next year goes, banks are kind of a symbol or beasts of the economy. And there's so much uncertainty about when rates could be cut next year, what economists think, and that in a lot of ways affects what people think is going to happen to the banks. And obviously, if you're the biggest bank and you have been able to boost your profits through an acquisition that can't normally happen during normal times, you kind of stand to have the biggest most difficult year-end drop. So that's what JP Morgan's up against. These other banks are also haven't performed quite as well. And in some ways, analysts are beginning to see them sort of as an upside story for 2024. So that's what we've got coming in on Friday.
The big banks reporting on Friday, kicking off that peak earnings season. David, thanks so much. Appreciate the insight. Coming up, closing bell on Wall Street. We're checking in on the latest market moves and the top trending tickers. Stay tuned.
There's the closing bell on Wall Street. Let's do a quick check of the markets here as things wrap up on this Wednesday here. Major averages in the green on the day here. So what does that mean here as we see the S&P 500 up about 0.5% on the day? Well, that means for year to date, thus far, in early, just baby 2024, we're up 0.1% thus far this year. So even though we've talked a lot about the slump to start the year for the major averages, the S&P 500 already back in the green here. When it comes to the Nasdaq, which as we know was the one that was kind of slapped the most, they're still in the red, down about 0.25%. I know it's a little silly to be talking about year to date when here we are 10 days in to the new year, but when the narrative was such that, oh, tech is really getting creamed in the beginning of the year, and now you're looking at a little bit of a comeback, especially because of Monday's surge in the NASDAQ. You know, it's just worth noting.
Yeah, and a lot on the calendar, by the way. Got big inflation data tomorrow.
Yeah.
Got the big banks reporting on Friday. Lots to chew over. Meanwhile, here and now, let's get to some trending tickers. Start here with Palantir. Said it's seeing high demand from Israel since the start of the war. It's according to Bloomberg. CEO Alex Karp saying in an interview in Tel Aviv, company has begun supplying different products than before. Shares of Palantir are seeing a pop in today's trade. So that was the news here. Alex Karp in Tel Aviv talking about high demand from Israel for these new tools from the company. Now, Karp didn't specify, it sounds like, which tech exactly Palantir is offering Israel. So we don't have all the color right now, but high demand apparently is what he's talking about here. Karp is in Israel. Apparently also billionaire Peter Thiel is there as well, who of course co-founded Palantir. Palantir, remarkable run, in part over excitement about AI last year. Remember Palantir unveiling what it calls AIP, Julie, its artificial intelligence platform. Investors very excited about that. The stock's now up about 150% in the past 12 months.
Yeah, as we've talked about previously, though, this is a controversial one for analysts, right? Sort of emblematic of that is Dan Ives on the bullish side, who calls it the Messi of AI, and then Brent Thill on the other side, who is not so bullish on the stock for this year, in part because of valuation. Yep. And in fact, if you look at the analysts, I took a page from the Josh Lipton book and looked at the analyst count here. 6 buys, 6 holds, 8 sells. And it's quite interesting to see a stock that is so buzzy, right, have that number of. It's unusual to see any stock, really. There are just not that many on Wall Street who do sells. Yeah. And yet this is one where there are quite a few.
It's interesting. I mean, after a run like that, you would expect people to step to the sidelines. And Brent Thill is a perfect example of that at Jefferies. Yeah. I mean, when you talk to Brent about Palantir, he's a fan of the company. He's a fan of the tech. He just thought it had reached, in his opinion, these kind of just unsustainable valuation levels at this point.
Yeah, definitely. All right, let's talk about WD-40 here. Those shares are surging after the company beat estimates on the top and bottom line for the fiscal first quarter, blowing past Wall Street expectations. The company sees top-line growth in all three of its trade blocks. The shares are up by 15% today. D.A. Davidson's Linda Bolton-Weiser, who was on with us just recently, calling it an impressive quarter, and she raised her price target to $289 here. Basically, the commentary from the company is that they're off to a solid start. Volumes are recovering, which is interesting here because we had seen so many companies really across industries, across manufacturing, talk about volumes lagging last year, even if prices were up. Now this company is saying that volumes are recovering.
Yeah, I have to, I've been kind of sleeping on WD-40 here. I mean, I didn't hit a 52-week high in today's trade of about 257. Stock is now up more than 60% in the past year. And as you said, the news today was chopping out earnings per share, net sales for Q1 better than expected. The CEO, as you noted, sounded very upbeat, Julie. They're starting fiscal 24 here. He says fire on all cylinders. Not a lot of coverage on the street, by the way, though. If you're looking for guidance from analysts, you have exactly 1 buy, 1 hold, and 1 sell.
Yeah, exactly.
All right, moving on here. Our final ticker, by the way, let's check out GoodRx, releasing its preliminary fourth quarter and full year 2023 results. Company providing upbeat expectations as it expects to build on its accelerating momentum in 2024. So GoodRx boosted its revenue guidance for the fourth quarter. It looks like they see revenue now between 195 and 197. It had seen somewhere between, let's say, 188 and 194. Street was at about 191. And they see EBITDA margin at the high end now between 2 and 5%. For the year also, they see revenue between 749 and 751. The street was about 749. CFO of the healthcare company, quote here, is saying, exciting work underway, expects to build on what they're characterizing as accelerating momentum in 2024.
Yeah, I tapped our Anjali Kamlani, our healthcare reporter, to talk a little about this one because GoodRx spoke at the JP Morgan Healthcare Conference, as well as putting out this this statement, and she's out there. She talked about the company having a strong December, more prescriptions based on seasonality. 80+% of their transactions are now repeat customers, and they have some partnerships, not necessarily new, but CVS and Cigna partnerships here that they're available via employer plans from those health insurers. So that's something she says that people were sort of focusing on from the presentation.
Stock's up about 30% in the last 12 months. Most on the street, though.
Volatile.
Very volatile. It's a wild-looking chart. Most on the street here on the sidelines. They have a meh. They're with a hold on this one.
So we want to bring you some breaking news, but I'm going to give you a big old dose of caveat with this breaking news. It does look like the Securities and Exchange Commission has now approved some of the spot Bitcoin ETFs. I've got a filing on my computer here in front of me. If I can believe my eyes, what we're seeing here is an approval of Grayscale, Bitwise, and the Hashdex ETFs. I also have a statement from Grayscale spokesperson saying that the Grayscale team has received necessary regulatory approvals to uplist GBTC to NYSE ARCA. And there is going to be a press release with more details shortly. Why am I so gun-shy? Well, if you were watching us here yesterday, you saw what unfolded then, a tweet on the official SEC government account that said that these spot Bitcoin ETFs had been approved, but then it was not correct. Gary Gensler, the SEC chair, saying it wasn't correct, and it turns out that someone accessed a phone number that was associated with the SEC account. So, yes, I have this, what looks like a filing in front of me that is approving those 3 spot Bitcoin ETFs. But again, I just want to tread care. And we also have a confirmation from one of the issuers. All of that said, I still want to be a little cautious because of what happened yesterday.
Well, do you feel better that it's not being announced on X? Maybe that's a good sign.
Yes, a lot of people are talking about it on X and think that it is confirmed. So that, it's still noisy.
No, I get it. You're a little gun shy. I will say, listen, big moment for Bitcoin and the crypto industry. We know for Bitcoin, rough 2020, 2022, 2023, it had a nice rip. And there's different reasons for that, right? But one you can say, because this is what people were betting on, that crypto fans bet this was coming. They thought the SEC would finally approve it. And and we had plenty of Bitcoin bulls on here saying they see this as a real tailwind for this asset class.
Just a little more color on our reporting on this situation here. The filing that I am looking at on my screen apparently is not accessible to everyone. And it's unclear whether it's because it's been flooded with traffic and therefore is crashing, or there's some other issue with it. Again, just want to, sort of
You're just putting
lift up the
caveats
veil.
out here.
I just want to be very transparent with people about what we're seeing, what we're trying to figure out. So again, Grayscale is confident that it has gotten the approval. This filing that I'm looking at lists these 3 issuers. That is Grayscale, Bitwise, and Hashdex. Interestingly, not mentioned in here, as far as I can tell, perhaps some of the other issuers, although we are seeing some of the others listed in here too on the second page, looking at iShares, Valkyrie, ARC21 shares, Invesco Galaxy. So they're all listed here. It's just unclear to me exactly what has been approved versus what was proposed.
Now, if they get the approval, Julie, that means they start trading tomorrow?
In theory, they could start trading as soon as tomorrow, exactly, if this is in fact what's happening.
Yeah, and then the question becomes, if you're an investor right now, you're excited about this asset class, and you have different vehicles, different products to choose from, what are the variables that go into your decision there?
Okay, this is a good question. I wrote about this in the morning brief today, and a lot of folks, including Dave Nadig of Verify, who was on with us recently, said, if you didn't like Bitcoin before, don't like it just because it's in an ETF, right? Steve Sosnick of Interactive Brokers also saying that. Don't sort of FOMO trade this. You know, I guess if you FOMO traded it back in 21, you're not going to come in just because there's an ETF now, or if you didn't do it then. So first of all, figure out, do you like Bitcoin as an investable asset, as an alternative asset? Then you want to figure out, okay, how much money do I want to put in it? And there are some percentages that people talk about, but the bottom line is, don't put money into it that you can't afford to lose.
Hyper volatile asset.
Hyper volatile asset. Even Tom Lee of Fundstrat, who I emailed with, who's a longtime Bitcoin bull, he says it's a volatile asset. We've got the halving later this year, which is something else that could cause
scheduled
volatility.
for April, I think. Yeah.
And then you want to figure out which one of these do you want to buy? We have had a number of the issuers come out ahead of the release and already cut their fees. So some investors say, just buy the cheapest one, that's the most important. But you might want to look at other things like liquidity of the asset, who's the custodian of the underlying Bitcoin. It gets a little in the weeds at that point, but there are people who just say, just get the one with the lowest fees.
Yeah, it is interesting when you talk to people though who say, you know, don't chase it here if you didn't like it before.
Yeah.
You know, it's different. But I do wonder, once the SEC steps in, I mean, the police who regulate our financial markets and they greenlight this product, it is interesting how that kind of colors and impacts investor sentiment, you know.
The official communique I did see yesterday from the SEC was an essay on investor.gov talking about being careful when investing in Bitcoin.
Which obviously makes sense, and you'd expect them to do that. I just wonder, you know, this is new territory now. This is a whole different landscape, and when Gary Gensler and his team are willing to approve the ETF, I have to believe it does impact and influence and shape how you think about the asset class in a different way.
That is true. That's a great point. All right, where are we leaving it here, guys? The markets. We have been seeing a rally here as Wall Street waits for the latest inflation print tomorrow. Expectations are that the consumer price index will rise by 3.2% on the year, showing further easing, which will be critical to allowing the Fed to lower rates, aiming for that elusive soft landing and avoid a recession. Our next guest, though, says the Fed is not out of the woods, and we may be on the cusp of a recession indeed. MKM Partners chief economist Mike Darter is with us. Mike, I got a little lost in my brain in the weeds of the spot Bitcoin ETF situation there, so forgive me. But taking a step back, looking at the much bigger picture, you are raising some flags here that we could still indeed see a recession, that a soft landing, that it seems like a sort of consensus here is not assured.
Absolutely. So thanks for having me on, and great Bitcoin discussion, by the way, an important one. So, right now the economy is in technically a soft landing. Growth has slowed, but it hasn't turned negative. The unemployment rate has leveled off and it has only really ticked up slightly. But if you look back at past business cycles, that's exactly what it looks like in a late cycle environment when there's a transition from above trend growth to trend growth, and then the next phase is a downturn, a recession, with the unemployment rate moving up in a material fashion. And so, we're sort of in a transitional stage here, but with the risk markets doing what they did last year, putting up a big year, there's just a tremendous amount of optimism that the soft landing is in the bag, and that will be what continues to unfold in 2024. So maybe I'm the last holdout. I mean, almost everybody is pretty optimistic at this point.
Little known fact about Mike Darter, Julie Hyman, economist, renowned strategist, black belt in Brazilian Jiu-Jitsu.
I knew this, but yes, not everyone does.
Which is why the viewers should know I approach Mike very, very respectfully with my questions. Mike, here's Mike. So you're urging sensibly some caution here on the economy, Mike. I'm wondering how that kind of influences, Mike, how you're thinking about the Fed and their rate cutting strategy here, Mike. Are you in the camp, with the markets? Do you expect 5 or 6 cuts this year, or no, it's going to be more like 3?
Yeah, great question. So I do think the Fed will be cutting rates this year, but I don't think they're going to drop rates 5 or 6 times in the context of a no-landing economy with double-digit earnings growth in a firm bid under risk assets. And that's really the consensus view, which I think is a head-scratcher. In my mind, there are really two tail risks here. One is that we actually do fall into recession, and then the earnings expectations are going to be too high. If it turns out, and that's incorrect, I mean, what you've seen in these other business cycles when the unemployment rate levels out, if it doesn't break higher, it tends to keep falling. And that would mean not only above trend growth, but it would mean the Fed would likely be back in the rate hiking game again. And these expectations for rate hikes would have to be fully priced out. So those are the two tail risks. This rosy scenario where you just have a baby soft landing, a double-digit rise in earnings and 6 rate cuts anyway, I mean, that's essentially priced in. So it makes sense to talk about what could potentially go wrong, in my opinion.
Mike, in terms of what could go right, perhaps, I am curious about your view on consumer spending. I mean, and this sort of anecdotally, we've had a crop of some of the retailers come out, say they had a strong holiday season, raise forecasts. We've had companies like Crocs and Lululemon come out and make these kinds of comments. Do you think that kind of spending is going to roll over as we see the economy decelerate?
Certainly, I think, from the growth rates that we were seeing in Q3, I mean, the Fed just simply won't tolerate that and is expecting those numbers to cool. So, if the data stays too strong, then they not only won't be cutting rates, but will be thinking about trying to restrain growth. So I think, at a bare minimum, we're going to get softer figures. The question is, does that degenerate into a full-blown downturn? The consumer is held in there because the labor market has been tight. We've got falling inflation. Some of these supply side shocks are unwinding. So that's all been helpful. But there is stress at the margin. We're seeing delinquency rates for consumer loans, credit cards, and the likes moving up in a fairly material way. And with the labor market likely to continue cooling going forward, those risks, in my opinion, should be focused on pretty carefully. So I'm not sure that I would be going headfirst into the consumer sector here, whether it's discretionary or retail. I think there are other places to be. I would play it a little closer to the vest, a little more defensively. Healthcare is one sector that is, I don't want to say bulletproof, but it's not super cyclical. It's not, incredibly levered to the business cycle, and it still screens pretty well in our research from a valuation standpoint. And utilities had a horrific 2023 until essentially around the end of the year when the rate structure peaked and have bounced pretty strong off the lows. So the utility sector we still continue to like. If one is of the mind that it is a soft landing, they don't agree with my call, and they want to be more cyclical, I would say, be a little careful with chasing tech here. The valuations are quite high, much lower on areas like energy and materials. We're not recommending those right now because I think you get caught up in a bit of a value trap if there is a downturn. But if an investor is just dead set on owning equities and being a bit more cyclical and aggressive, I would say look at those two, which have underperformed, rather than what has absolutely just exploded upward in the last year. And we know these markets, don't move in a single direction. I mean, even if we are in an ongoing expansion and bull market, you will have periods of corrective shakeouts. And, with what we saw last year, I think we just need to be a bit careful here about chasing momentum.
Mike, I'm a little disappointed your dog Klaus didn't join us this time like last time. I was hoping to see him, but it was
He's
right there, I can see. But as always, Mike, it was great having you on the program. Always appreciate your time and insight, Mike.
Thanks, my pleasure.
Still to come on Yahoo Finance, we've got extended crypto coverage for you this afternoon. As it appears, spot Bitcoin ETFs have indeed been approved. Morning Brief anchor Shauna Smith will speak with Coinbase CFO Alicia Haas just after 5 p.m. Eastern. You won't want to miss that conversation. We'll be back with more on Yahoo Finance right here on the other side of this break.
Markets closing higher across the board with the S&P now at its highest level since 2022. Jared Blickery here with a look back at the trading day. Jared.
Julie, highest levels of the year for the S&P 500 and the Nasdaq. You can see the Nasdaq up 0.75%, and we got some vibes of 2023 right now. Check out the leaders of the day: communication services, tech, and consumer discretionary. Those are the three mega cap sectors, all of those outperforming. Meanwhile, energy, which took a bath last year, that's in the red right now, along with staples, materials, and utilities. Very telling, because staples and utilities have been the leaders this year so far, along with healthcare, and they are not leading today. So is this a reversion to the everything rally led by the mega caps that we had in the last few months of the year? We'll have to see, but this is what the Nasdaq 100 is looking like this afternoon. Nvidia, another record closing high today, went over a bunch of those from a bunch of different sectors. Meta also up 3.5%. Amazon and Microsoft up more than 1.5%. Tech really did come back today. And here's a look at the software heat map that we have here. PanW, that's Palo Alto Networks, that's up 5%. CrowdStrike and Atlassian up over 3%. And the semiconductors, we just took a look at Nvidia, a lot more red than green. So not across the entire tech sphere are we seeing these gains. Texas Instruments and Applied Materials, those each down 0.8%. Micron and Taiwan Semi down 1%. But I do want to get a quick check of some of our crypto stocks as we take a look at the Bitcoin ETF being green-lighted today. Galaxy was up 6.8%, up another few percent, it looks like, in the post-market. Not too much activity here. I am seeing a 6% rise in future fintech group, so take that for what it's worth and a grain of salt here. But taking a look, I'll leave you with Bitcoin, and we can see there's some interesting sideways price action there. I think, though, we finally have our decision, and hopefully we'll be able to rock and roll tomorrow.
All right, here's hoping. Thank you, Jared. Meanwhile, the House and Senate tax writers are close to reaching an agreement on expanding the child tax credit. The deal, which has been considered a long shot, looks more and more likely, and the impact could have a real-time benefit on some of America's neediest families. Yahoo Finance's very own Rick Newman has been following this for us. So, Rick, have we finally found it? We found the one issue both sides can agree on. Is that it?
Maybe so. And I think this has been undercovered because, to the extent anybody's paying attention to Washington, other than Bitcoin decisions, it's about, is the government going to get funded? Are we going to have a shutdown? Is there going to be that funding for Israel and Ukraine? And what about a border deal? That's where all the action is right now. But sort of behind the scenes, there has been this bipartisan agreement to do a couple of tax cuts and fix another tax cut. So there's a pandemic era tax credit from 2020, the employee retention tax credit, that's supposed to go through to 2025, but apparently there's been a fair amount of fraud in that program, and Congress wants to cut that off and basically reclaim some money. And of course, Congress doesn't, when Congress gets free money, they don't say, oh, let's pay off our debt or let's pay off our bills or anything. Let's do another tax cut. So it turns out there are some tax cuts that businesses want. They're actually tax deductions, so speeding up tax credits that it used to take 5 years, go back to the way it was, make those credits takeable in just 1 year. That's kind of on the Republican side, although there's some bipartisan agreement there. And then Democrats say, well, in addition to that, let's expand this child tax credit, which is a good tax credit. The child care tax credit is correlated with reductions in poverty, including reductions in child poverty. Congress expanded it by a lot for 1 year back in 2021. Poverty rate went down, child poverty rate went down, but then it expired, and there wasn't enough momentum to renew that expansion. So it's not going to be quite as generous as it was during that one pandemic year if this passes. But working families will get a break if this goes through.
How does it work exactly?
The child care tax credit. So there is a child care tax credit on the books. What Congress has done before is expand that credit to make it more generous. It's a fixed amount of money per child. And it is fully, what they want to do is make some of it fully refundable, which means you get the whole value of the tax credit, even if you don't have income to claim the credit against. So you would actually get a check from the government, and some of that, it could be that you get some of that money right away instead of having to wait till you file your taxes. But that policymakers and policy experts like that tax credit for a couple of reasons. One, it goes to people who need it. clearly, and it's kind of like directly transmittable. It doesn't have to go through 4 steps in order to get to the people who need it. It goes pretty quickly to the people who need it. And as I said, it's correlated with a good outcome, which is a reduction in poverty rates.
Yeah, that is a good outcome, and it's very difficult to find childcare, especially
That
affordable
too.
childcare.
So possible bipartisan legislation coming.
Love it.
Who would have thought?
Love it. All right, thanks, Rick Newman.
Sure thing.
Appreciate it. Coming up, we're sending it back out to Las Vegas as Yahoo Finance's Akiko Fujita will catch up with someone from the Department of Homeland Security to talk about using AI to defend against cyber attacks. Stay tuned. Don't want to miss it. Good morning. This is Yahoo Finance.
Big news, 3 things that you need to know.
We just got the announcement.
What happens now?
I got a question. What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings, and they give you information if you watch them closely.
President Bostic, President Investor Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
And we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You gotta scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
I'm Akiko Fujita here on the ground in Las Vegas for CES 2024, where the focus has been, no surprise, artificial intelligence. I'm now joined by Dr. Dmitry Kuznetsov, who is a Department of Homeland Security Undersecretary for Science and Technology, talking about the risks, how you think about the risks from a Homeland Security perspective when it comes to AI. The proliferation of this technology, particularly Gen I, has been so incredible the last year or so.
Oh, yeah.
How has that shifted the way you think about the risks that are out there for Homeland Security?
It changes a lot, and it's not just AI, it's that the suite of emerging technologies are like engineering platforms. They all talk to each other, almost like, you know, Legos. You can piece together some gene editing with some big data, with some AI and some manufacturing, and you can compose things that have never been done before in smarter ways, and the ability to use machine learning or AI to kind of fuse and create novel things brings with it the downside, because it's a democratized technology. Many people have access to it. What are we going to face as these things become more prolific, more ubiquitous? And so with AI, I think about the adversarial side, all the ways you can fool a system that is smarter.
When you talk about the downside, what is that as you see it?
Well, you know, already for some years, people have shown you could stand in front of a facial recognition system and be invisible. I could be you or anyone else. You can fool it. In cyber attacks, we've kind of grown up over the decades. We have an ecosystem. We know what to look for. Someone is trying to inject a rogue instruction into your system. They have to penetrate it. They have to put something there to have it do something. AI attacks, you don't have to touch a system. If you understand things about it, you can get around it. And so the nature of AI attacks already is quite distinct, and the thinking you need is different. And we're going to have those moments like, oh, I didn't think that could happen. And there's going to be a lot of that.
Department of Homeland Security, obviously not just looking at domestic risks, you're looking at this from a global perspective as we see AI really take hold. When you look globally, what are the big hotspots? What are the key concerns?
The kinds of challenges, you know, again, thinking about AI, you mentioned generative AI. AI threats that are global include some of the transnational criminal organizations that work to, for example, draw immigrants through Panama up through Central America. There's a lot of interesting disinformation. You know, you'll get Disneyland tickets, we'll take care of you. Please go this way. It is a business model for people, and the way you reach out and inform them about, hey, here's a great opportunity, is getting smarter, more targeted in native languages. There's transnational repression, how foreign countries can target certain populations here or elsewhere, and kind of repress them in different ways. And generative AI is an enabler of things like that. There's kind of a global side to it.
Are there particular countries, particular regions that really keep you up?
I think the fact that anyone can do this is part of the challenge. It is very enabling today. You know, you just have to walk around this show, which is, you know, CES is really probably the premier global technology showcase. Everything here is smarter. Everything's being reinvented, and with that will come new functionality, new threats, new issues, open to anybody. You know, it's a very democratized space.
I mean, you talk about just walking the floor here at CES. I mean, you could argue every company operating in some way with AI technology. What's been the conversation for you, the takeaway from the conference as you talk to these private companies? You're in the public sector. Yeah. You're trying to get ahead of the threat. What's been the discussion for you?
Well, part of it is we have a lot of boutique needs. We don't buy huge numbers of things, just the nature. You know, if it's for Secret Service, it might be onesies or twosies for certain kinds of protection details. If it's for airports or borders, you know, it's hundreds, maybe thousands. It isn't driven by a huge market cap. And so the things we need often are offshoots of main commercial paths that companies are doing. And often we need piece parts of innovation from different companies. And how do you blend IP or work together to create something where you protect IP in the right way and incentivize? So working with us beyond transactional is really important. We have important things that we have to do that impact really everyone in the US. And the question is, how do we generate the best from such a vibrant, you know, ecosystem?
You released what's essentially a roadmap for preparedness, yeah. AI preparedness. As you look at what the Department of Homeland Security needs to do to tackle this, where do you see the biggest holes right now?
It's not so much holes, it's that I certainly personally believe that the world of tomorrow is a bit non-linear with respect to today. Excuse me. The world of tomorrow is going to be different, and that the risk models we have today may not scale to what we worry about tomorrow. When you leave here, you'll go through Las Vegas International, you'll go through our checkpoints. You know, how do you rethink that in the view of a smart, changing world? And what are the risks that are coming tomorrow beyond it's you and it's in your bag, you know? And if it's not that, then it's nothing else, you know? And so if it's on our list of things that it could be, then that's what we worry about. And if it's not, then we're okay. You know, how do we get beyond that model? You know, we have smart systems. You go up here to the Innovation Award area, everything's being reinvented. There isn't anything you can point to that isn't being rethought. We could do with some of that as we think about our use cases.
And while so much of the focus has been about the risks of AI, I imagine you're probably looking at this from twofold. You want to be after the risk, be ahead of it, but at the same time, AI can be a huge tool for you in tackling some of these risks. How are you thinking about that? What does that look like?
So it's a big force multiplier. So DHS has about 260,000 people, mostly law enforcement, responding to many kinds of threats. And so what we need are solutions that go beyond we have to hire more people. And there are places where we've seen this. So, for example, we work in war crimes to make sure people don't get on no-fly lists and don't come to this country. You have to view incredibly toxic images and information. We do child sexual exploitation, dark web streaming content, crypto, things that are air-gapped, piecing together these kinds of networks. We've had this year a 50x improvement in the ability to make leads because of AI, because we can understand content, the environment, the networks, the fabric of these criminal networks that traffic in children, and it's led to this year freeing children, rescuing. It's led to arrests, led to convictions. But the 50x improvement could have been met by 50x staff up. It didn't. Same people, far more effective. When we do bulk cash money laundering, trying to understand criminal organizations, what used to take 3 years and 10 experts just a couple of years ago is now just a matter of days. And so there are places where the use of smarter tools with this data is significant, but it's not a commercial product.
It's fascinating to see the changes there. Thank you so much. Really appreciate the time.
Thank you so much, Akiko.
Breaking news, the Securities and Exchange Commission has indeed approved 10 spot Bitcoin ETFs here. I believe, is it 11 of the? Anyway, they've approved the spot Bitcoin ETFs here. We know this now. The release is out. It is official. Gary Gensler also is out with an official statement in which he still is very cautious about Bitcoin itself and makes it very clear in the statement. We did not approve or endorse Bitcoin, he says, at the end of his statement. So after a lot of back and forth, a lot of confusion. Indeed, the spot Bitcoin ETFs have been approved. Grayscale also out with a statement on this, and these products are expected to begin trading as soon as tomorrow.
Yeah, it is interesting how he ends the letter that, again, emphasizing the caution, right? Says, listen, yes, we approve this. Doesn't mean we're approving or endorsing this asset, right? I mean, investors, he said, should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto. That was also interesting. He made a point because, as people see these new products getting approved by the SEC, already people have started thinking about, well, what else are they going to approve coming down the line this year, maybe later this year? And he goes on to say here, just because we approve this doesn't, you shouldn't take this to, in fact, he says, sort of signal how we think about the status of other crypto assets as well.
I mean, there is anticipation that once this happened, that the spot Ether ETF would be approved later in this year, but that's putting the cart before the horse, especially if you've been around for the past 24 hours, right? There will be eventually options trading, most likely, on these products, so that could also add a dimension here. But I think that the drama around this is notable as well, with someone gaining unauthorized access to the SEC's official X account yesterday and posting that this had happened. And I think also, yes, it was sort of noise, but at the same time, in an industry that is striving for legitimacy and has been for quite some time, and broader adoption, it's not a great look.
No.
That happened.
Well, and it isn't a great look when that happened. It'll be interesting. I think we have David and Jennifer actually here to get their views as well, bring them in here too to get their response to this news. But I agree with you. I mean, with the news yesterday, that just total debacle, and then the kind of back and forth that we saw with X. I mean, obviously Elon Musk owns X. He is not a huge fan of the SEC. I'm trying to find a way to put that as diplomatically as I can. So they're kind of going back and forth saying, listen, not our problem, it's your problem. You didn't even have, basic two-factor authentication enabled on your account. So there was a lot of drama around that. And I think it is like, what's some of the ramifications of that? Is there a black eye left there?
Right. Well, bottom line, they're approved. And so let's indeed bring in Dave Hollerith and Jennifer Schonberger, who have been all over this, you guys. Thank you both very much for helping me understand all of this as it was unfolding. Dave, I want to start with you. I'm a little confused here about how many issuers applied and how many have indeed been approved. Can you break that down for us?
Yeah, so I mean, at one point we had a total of 14 issuers, and at this point, 11 have been approved. There are 2 global X ETFs and also Pando, a Swiss firm, and they have both not been added. One part of that has to do with just timing of their filing compared to the other applicants who have filed. But right now, at this point, we're looking at 11, and I guess we'll find out a little bit more about what's happened to the others.
And Jennifer, I want to bring you here in as well, and actually just get your take on, I don't know if you heard what Julie, we were just talking about here. This was, yesterday was a debacle, right? That was not the headline anybody wanted to see. It caused a lot of confusion. It triggered Bitcoin prices up and down. When you think about that, Jennifer, and then of course X coming in and saying publicly, listen, this wasn't us. You had your systems compromised, not ours. You didn't even have basic 2-factor authentication enabled on your account. And meanwhile, you're the police of the financial markets. I'm wondering, Jennifer, is there a reputational hit for the SEC? Do you think they have a black eye after this?
I was just going to say, Josh, this is kind of a black eye for the SEC. And I was listening to your dialogue before you brought us in, and you guys were spot on. And I think the fact that it created so much volatility in Bitcoin's price sort of underscores the SEC's fears about market manipulation. Here you had a hacker come in, put some information, false information or premature information on an official government account that caused major swings in Bitcoin's price, which is going to create a lot of whiplash for investors. Now, of course, we have the official trading vehicles, so perhaps the SEC will be better able to regulate these. And Chair Gensler clearly points out in his statement, a very long statement, that sponsors of these Bitcoin ETPs are going to be required to provide full, fair, and truthful disclosure of these products. So we'll see how they're able to sort of navigate this going forward. But I think also, to your point, this doesn't mean just because the SEC has approved spot Bitcoin ETFs that necessarily Ethereum is next in line.
Yeah, I think that's a good point. I think, it was interesting in our discussion earlier today on Yahoo Finance with Valkyrie Stephen McClurg when he was asked, do you see Gary Gensler as a friend or foe of the industry? He acknowledged that much of the industry does see him as a foe. He, however, didn't view it that way. He said, we have seen that these products have been introduced and adopted. So he said, we have seen progress in the U.S., even if it's maybe not as quick as some in the industry would have wanted. So, Dave, I guess then kind of what's next, right? It looks like we are going to see trading of these products tomorrow. And then the folks you're talking to, what are they expecting from them?
Yeah, it's kind of funny you mentioned this. The Bitcoin price right now has been relatively flat unless my price charts are lagging, which is a total possibility. But it is kind of funny after all of this that things are largely flat today. But approval with the exchanges has been that dialogue has been ongoing. And it looks like they're effective to trade as soon as tomorrow. So the exchanges have been actually preparing with issuers for a potential listing behind the scenes for a while now. And what's going to be big there is the first day flows that each of the issuers or these products have, and that to a large extent, as Julie, I know as you've spoke with a lot of people about, is really important as far as which of these products have staying power. So that's going to be a whole other story for tomorrow.
Yes.
Can I jump in here, guys? So just adding on to what David said, everyone's focused on, this is the watershed moment. And this is when we're all of a sudden going to see so many retail assets flow into these ETFs or ETPs, I should say. They're exchange traded products. A lot of people keep calling them exchange traded funds. They're actually exchange traded products. But so we'll see if that happens. But I think it's important to take a step back, because really what this does is it makes it easier for pension funds, 401k investors to gain exposure in a limited way or a large way to Bitcoin in a way that they haven't been able to do previously, right? You had to go and take your dollars and then buy Bitcoin on some sort of exchange like Coinbase in order to gain exposure. Now you can go through your Charles Schwab or your Fidelity account and easily just click on that ETP. So I think it does open the door, and we need to take a longer term view of how retail cash flows are going to flow into this asset class over, the next year or so, or the coming months, right? Not just the next couple of days.
Yeah, and that's something that's been echoed by the issuers themselves as well. They've sort of cautioned against the idea that on day one, that there's going to be this huge flood of assets. It's going to be a process that's going to perhaps take some time. Good reminder. Thank you, David and Jennifer, and thank you very much for your hard work on this story. Appreciate it. Coming up, we're going to go around the horn and check in on some of today's top trending stories. Josh Schaefer, Madison Mills, Pras Subramanian standing by with What to Watch. Hey, Maddie.
We're going to be talking not Bitcoin for a second, but the debut of OpenAI's ChatGPT store and what it means for the business moving forward.
And Tesla finally gave its U.S. and Canadian-based buyers the updated Model 3 they've all been waiting for.
Pras, I'm a little bit out on that updated Model 3, but we're going to break down why on the other side of the break. Stick with us.
Good morning. This is Yahoo Finance.
Big news. 3 things that you need to know.
We just got the announcement.
What happens now?
I got a question.
What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings, and they give you information if you watch them closely.
President Bostic, President Investor Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
And we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You got to scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
Welcome to Yahoo Finance's group chat with me, Madison Mills. I've got Josh Schaefer here and Pras Subramanian. Thanks for being with me here, guys. Gonna go a little bit off of the Bitcoin conversation. Today we're kicking it off with OpenAI announcing the online store that's gonna have some chatbots for you. They announced this over at CES. This is what I think is important here. They're launching the GPT store. This is very similar to the App Store, and it means that you don't have to have coding, developing background. I certainly don't. And you can build somewhat of an app based on whatever you want your dream AI to do. So if it were me, for example, I'd maybe do what I do most days, copy and paste a long research note and ask for some bullet points. Maybe I'll turn that into an app that me and both of you would be the only ones using. But this could be a huge moneymaker for people who don't have that development background and can come up with cool apps using the GPT software.
This makes a ton of sense for what I think ChatGPT's best use case has always been for people. When you think about what you want AI to be your friend in some senses, and when it's the chatbot, right? You want to be able to say, hey, we put up a video a little while ago, All Trails, a great trail app for anyone that hikes. It has reviews on different trails, things like that. You can type in, I'm a average hiker, I like this level of elevation, I've been to these kind of mountains before, and it basically creates a great Google search for you. Right. I think it's an excellent product. I saw they're also doing it with things like books. I've read these authors, I like this kind of narrative, give me a good book recommendation. It sort of turns into a better version of Google and a better friend.
Yeah, I mean, so I saw that they had the Khan Academy tutors, also seeing the Canva as a design bot. I guess my question is, why can't I just query ChatGPT normally to get this information? Is it because they have a better repository for, like, let's say the hiking trails? Are they like kind of siloing that information in a better GPT sort of experience? I guess that's what's happening. And then second thing is that I guess you're not going to make that much money. Actually, it's not. You're not getting paid for it. You have to actually be a pro user. Right. You pay OpenAI, and then they pay the developers, right? I think that's how it works.
Yeah, it seems like a smart play from OpenAI as far as getting more revenue streams, which we know has been a big discussion there on if they should be getting more revenue streams. But we'll put that one on hold for now. We're going to pivot to another story. It seems that lots of corporate America is making slimming down their workforce part of their New Year's resolution. Amazon and BlackRock both announcing staff cuts today. Amazon announcing cuts in its studios unit, as well as cuts coming at Twitch, which Amazon owns. That is the streaming platform. They stream, most popularly, I would say, video game streamers and things like that over on Twitch. I think at a high level, we're starting another year. It's January again, and we're talking about tech layoffs and sort of wondering if that's going to spiral into broad-based layoffs in the labor market. That's sort of what I'm thinking about last year. If you remember January 23, it was kind of a similar story. Okay, a couple companies right-sizing. We're wondering if everything's going to kind of turn south. It didn't last year. Just a couple headlines for now, not really broad-based layoffs that we're seeing across the labor market, but perhaps something to watch moving forward.
Definitely something to watch, especially when you think about BlackRock, because they noted that this is definitely a direct result of the switch to passive versus active investing, which I found so interesting. Are we starting to see important figures on Wall Street embrace this idea that passive investing is winning out on a lot of retail investors, and that's leading to less of a need for them to have as much staff on hold?
You know, that Twitch stuff, really interesting there, because I thought that business was really successful. They paid out $1 billion in fees to their streamers, but I guess high overhead costs, high technology costs, not going to work for them, and they kind of got to slim down. And I think you're right, Josh. I think this is the beginning of another wave of layoffs. I mean, just right when we thought the end of the year happened, fresh slate, no, more layoffs.
I don't know though, because I feel like I was listening to Dana Peterson talking about this earlier today, an economist, and she was saying that you feel like the economy is really bad if your industry is impacted. So I feel like for us, media layoffs happen literally every day. So for us, maybe it feels like this is going to start to be a bigger thing, but I don't know. It feels a little bit idiosyncratic still to me. I guess we'll have to see.
Initial jobless claims.
Exactly.
Our favorite indicator.
There we
in that
go.
Case,
Initial
right?
jobless.
Staying right about flat at about 210,000 per week, Pross.
All right. Well, those of us feeling okay with our situations, we're looking at, after waiting several months, Tesla finally gave its U.S. and Canadian-based customers and fans the updated Model 3 we've all been waiting for. This was dubbed Project Highland. Came out in Europe and China earlier this year. Been waiting for it, or earlier last year. It's got a revamped exterior, new suspension, which I heard is a big deal. Rides better control, better handling, a new screen in the back, better seats, things like that, all for the same price of $38,900. So I'm actually surprised it kept that same price, but I don't know I think it might actually move the needle there for Tesla. The Model 3 was getting long in the tooth. I think it's going to help for Q1.
I'm curious if this is just something that people that already own Teslas are excited about, and maybe they go out and buy a new Tesla, versus does this bring new consumers into the Tesla market, right? Because it seems like right now, at least from what I saw online today, a lot of the Tesla community is excited about this, and we know the Tesla community is very outspoken online, and I'm glad that they're excited. That new car looks pretty similar to the old Model 3 to me. It's still got that big fat back that I never really liked.
I'm fascinated by how much you hate
I think it's just a little
like
ugly.
Every other car to me.
I just think it's pretty ugly.
That looks
Tesla.
like a car to me. I don't understand.
No, I mean, it looks like a car. That's great. Then I think it's going to sell like a car, and like Tesla probably needs it to sell better than a normal car is sort of my point. I don't know. I expect more out of Mr. Musk and Tesla from a design standpoint.
That's fair. I'm still waiting on the cheaper version. That's what I feel like, Proz, I'm coming to you looking for them to get that market share on, is if they can have the cheaper model out.
Well, that big fat back, I mean, maybe that'll help the Q1 numbers.
All right, we got to go find one of these new Model 3s to take a spin in with Pross. But coming up, we're going to bring you what to watch tomorrow. We break down the stories you need to know to start your day.
Here's what to watch tomorrow. We're going to be watching, of course, the first trades of spot Bitcoin ETFs after the Securities and Exchange Commission approved the funds. Investors will also be focused on the latest inflation print. CPI is out ahead of the open, and it could provide new insights as to when the Fed may start cutting rates. Economists expect to see prices rise 3.2% in December from a year ago, a slight uptick from November.
We'll also get the first set of initial jobless claims for 2024. Forecasts predict that we'll see unemployment claims rise from the previous week. And we'll get the latest survey on mortgage rates from Freddie Mac.
And on the political front, fresh from a town hall live on Fox News tonight, Donald Trump's civil fraud case expected to come to a close tomorrow as the closing arguments are set to be heard in New York.
Also, we are looking ahead to more discussion of the spot Bitcoin ETFs. We've got extended crypto coverage for you this afternoon. On the other side of the break, Morning Brief anchor Shauna Smith is going to speak with Coinbase CFO Alicia Haas. You don't want to miss that conversation, but that's not all. Tomorrow, I'm going to be talking to Michael Sonnenschein of Grayscale in the morning. Top executives at those three companies that have had spot Bitcoin ETFs approved. He is one of them, of course. We'll also hear from ARK Invest CEO and CIO Kathy Wood, as well as Bitwise CIO Matt Hogan. So all of these issuers are probably quite relieved today, and we're going to talk to them about all of this. We'll be right back.
The Securities and Exchange Commission approving spot Bitcoin ETFs that will start trading tomorrow, our next guest says. It's an exciting transition for Bitcoin and the crypto industry, potentially ushering in a new class of retail investors. For more on today's spot Bitcoin ETF decision, we're talking to Kavita Gupta, Delta Blockchain Fund General Partner. Kavita, it is good to see you. So it's a big day here for Bitcoin, for the crypto industry. We know crypto fans have been waiting for this, Kavita, for a while. First off, let's just get your response, your reaction, Kavita, to this news.
Josh, first of all, thank you for having me. And finally, we are here. It only took 10 years, not a big deal. and a court case, which is actually also mentioned by Gary Gensler's comment that actually after the U.S. District Court of Appeal in D.C. actually said that what is the reason for hold up at commission is what made them actually approve it. So finally, it is a win by the government, by the U.S. court system instead of just SEC, but we are finally here and very excited about it.
You know, that said, as you point out, the hand of the SEC was really forced here. And Gary Gensler makes that abundantly clear in his statement, saying at the end, we don't approve or endorse Bitcoin. You can almost sense him holding his nose as he's putting this thing out. There was actually a dissent from another commissioner at the SEC, Caroline Crenshaw, who said the commission's actions are unsound and ahistorical and said they could sacrifice investor protection. You know, what do investors still need to keep in mind here if they're investing in Bitcoin when you have these regulators telling them it's not safe?
You know, it's been a very weird cycle for the first time in my personal experience, because it's a very similar thing what happened with the Coinbase IPO. Everything got approved. Coinbase went with IPO, and then they are like, oh, certain things which you have actually listed are securities, not commodities or currencies. And there was like a huge hula around it. And the similar thing with the ETF, which we felt like. And then at the same time, you have the Twitter account, which got hacked yesterday, and there was a whole market movement based on that hack. I really feel like for the retail customer at this point of time, at least when it comes to cryptocurrencies associated, I'm not very sure how much SEC is towards retail customers or not. And, you know, even in their announcement, they have talked about that it's already available through different brokerage system, through Grayscale, Trust, etc. So it's not like retail customers do not actually have it accessibly available. It's just going to be much more easier now.
And Kavita, I'm also interested to get your take just on the underlying Bitcoin market, how that has changed and evolved, Kavita, over the years. You know, has it evolved in a way that helped the SEC get more comfortable approving these new products? Has it become, you know, as you see it, has it become more mature? Has it become more efficient?
I mean, it's actually this week has been the 15 years of the first Genesis mining for Bitcoin. So it's very interesting. The 15-year of history when it started all the way back from the Wall Street movement to today, where we actually have certain sort of, government approval, though the letter says it's only for one particular type of non-security asset class, which is Bitcoin, and they don't see the similar approval for any other asset class for the time being. I feel like this does legitimize for a lot of institutions, which has been having a little bit of up and down with every bull and bear cycle. What we really see out here is that Bitcoin is here to stay. And so if the decentralization and the utility for other technical platforms like Ethereum, Solana, or other platform exist as a protocol, then we do get to see a much more adoption at the institutional level.
So do you see this then as a price catalyst?
Absolutely. I mean, but at the same time, this is a price catalyst for both upwards and downwards. I mean, the market has already moved. If you just see, like within a year, YTD has been a 160% movement for Bitcoin just in the last 2-3 months based on the ETF approval, the speculations around it. Right after the approval and last half an hour, the market has moved a lot. But what we will continue to see is also the other factors, like if the interest rate cuts down or something, the market will move up. But we could also see some sale orders, a big sell order also around this point over next 2-3 months. So there is a huge catalyst, but it's also about the underlying market volume. So what I am expecting is a huge institutional cash flow into this currency.
Kavita, big day for Bitcoin, big day for crypto. Thank you so much for bringing your perspective and insight today.
Thank you.
And now we're going to bring in for more team coverage. Our very own Shauna Smith is here.
Hey there, Josh. Thanks so much. Well, let's talk a little bit more about the big story here this hour, and that is the SEC approving 11 spot Bitcoin ETFs, a landmark decision for the industry. And crypto exchange Coinbase is playing a huge role, acting as the custodian for the majority of the applicants approved today. So we want to bring in Alicia Haas, a CFO of Coinbase. Alicia, it's great to see you. Congratulations on the news here that we're getting in just the last hour. Put this in context for us, for our viewers. How big of a moment is this for Coinbase?
Well, thanks for having me, Shauna. So today was a landmark day for crypto. 10 years ago, the first application went in, and today we got 11 ETFs approved from the SEC, as you noted. And many of those did highlight Coinbase's extensive role in it. So we're really proud to be part of this moment. We're proud to be a trusted partner to the industry and the primary custodian for 10 of the 13 applications so far. And we really believe that this moment will expand the pie. It'll create a positive impact for the overall industry. And it just reflects the maturity of Bitcoin, the maturity of the asset class, and another stamp of approval. But this is a long journey, and this is just one step along the way.
And going off of that, the maturity that you were just talking about of the industry right now, what do you think of the timing? Why does the timing today here make sense? It is a decision, or it is a view here from the SEC that the industry has been waiting on now, like you just said, for 10 years.
Well, I think it's important to recognize that Grayscale has been an important partner at pushing this forward for years. And we're proud to have been their custodian since 2019. And we're really grateful to their efforts to move the SEC and clearing the way for today. But there's also been important court cases along the way. And I want to just zoom out to the big picture here, which is we now have 52 million Americans who own crypto assets, and many of those started with Bitcoin as their first asset. So this is a well-adopted asset class within the US system, and I think that this moment in history has just shown that the energy around crypto, the number of market participants, the number of institutions that wanted to gain access to this space has helped us get to today. But there was important case studies along the way and important market players who've been pushing and applying and pushing the door open for now 10 years.
Alicia, Coinbase playing a very critical role here. Investors relying on you as a custodian to safekeep and keep their tokens here extremely safe. What are the top steps that you are taking in order to ensure that investors' investments are safe on your platform?
We are proud of our long history of safely storing assets for both our retail and institutional customers. So we have a qualified custodian, and that is the product that we are partnering with many of these ETF providers, which means that we will be the underlying Bitcoin custodian for the ETFs. So when these issuers issue the ETFs, they have to buy the spot currency. They then hold that in custody, and that is what we are providing. So we enable security, cybersecurity, as well as then strong operational and legal protections for the assets that they store at our Coinbase custody.
But Alicia, just to that extent and digging in a little bit deeper, just this cybersecurity risk, that aspect of that, I think that has shaken a lot of investors' confidence. A lot of investors have been a bit apprehensive of investing in crypto because of what we have seen play out over the last several years. So what are you at Coinbase? What can you do in order to restore some of that confidence within the industry?
So we're really proud to have been selected, as we pointed out, by 10 of these issuers. And they've gone through extensive due diligence on our platform to test our controls. But we're also proud that we haven't had any material losses or hacks of our platform where we've lost customer assets due to our protections. And that is due to our now 12-year history of storing assets on our platform. We invest extensively in our security team, but we also invest in our strong legal protections, in our operational protections, in our compliance to ensure that we are actively monitoring and assessing risk on our platform.
Alicia, what do you think this is going to do to the price of Bitcoin? We're just in positive territory here for the day, still just shy of 46,000. What do you think that upside looks like?
Oh my goodness, we do not predict the price of these assets. What I will say is that we don't over-index on the short term. We are playing a very long game here. And while this is a monumental step forward for the industry, it's expected to have volatility, and we prepare for volatility of all shapes and sizes on our platform. So this will give us the opportunity to invite trillions of dollars that were previously not able to access crypto assets and not able to access Bitcoin that are stored with registered investor and advisors in other funds, and then you're going to now have access to this asset class. So we think this will bring institutional volume to the asset, but in the short term, what that does to price, I can't say.
Alicia, what about the prospect of what comes after this approval? Lots of talk when you take a look at investor sentiment right now that we might see some approval of other crypto products. How likely do you think that is? And any guess just in terms of the timing, what that could look like?
Oh, I cannot predict the timing. We couldn't predict this day specifically until just a few weeks ago when rumors started to really start to take some seeds there. But I think that what this shows is just the continued commitment of the overall crypto industry to march forward, to get things approved, to work hard, whether it's through the court systems, whether it's through the regulators or the international stage. And I think this is just a continued momentum and legitimacy in opening up the crypto markets to millions and billions of people around the world.
And Alicia, going back to the confidence part of all this and the risk that is still associated with crypto just in general, and we were talking about it earlier on in the show, Julie and Josh were discussing the one dissent that we did get from one SEC commissioner, Caroline Crenshaw, saying that this puts us on a wayward path that could further sacrifice investor protection. What's your response to that?
I believe very strongly that crypto is the future of money, and this is going to introduce more people to crypto and eventually the crypto economy. We've been at this for a decade, and as I shared earlier, we now have 5% of the world owning crypto assets. Coinbase works very hard to ensure that we're protecting our customers, and we work very hard also to drive regulatory clarity. It's something that we feel very passionately about, that we do need regulatory clarity around the world. We're proud to say that now we have many of the countries bringing forth crypto legislation that brings that consumer protection. We have invested in consumer protection on our own platform and hope that the US brings that clarity to investors so that they can have the confidence that we have in this asset class. But today, we are just proud of this moment to open up new flows into crypto, new flows into Bitcoin, and we think it's a first step of many on their journey into the crypto economy.
All right, Alicia Haas, thank you so much for taking the time to join us here, CFO of Coinbase. Thanks, Alicia, and congratulations.
Thank you.
Julie and Josh, back to you guys.
Thanks so much. I mean, really interesting here, and interesting the role that Coinbase is playing in this whole situation. I also thought it was really interesting that Alicia, you know, we've been so focused on whether or not these things are going to get approved or not. I haven't heard the good old-fashioned "Bitcoin's the future of money" face. Yeah. In a hot second.
That's true. Going back to the discussions that had played out within the industry years ago, whether or not it could potentially replace the dollar, lots of talk about that. We have seen the conversation shift. Nothing from Alicia about that, but I think what she was saying just in terms of the excitement, some of the clarity that this decision from the SEC provides today for the crypto industry going forward. And then just beyond today's approval, what could be coming down the pipeline in terms of other crypto products. We have seen some of that investor sentiment, excitement in Ether, some of the other crypto plays out there. So exactly what the future holds for the crypto market, obviously at today's approval, a huge step forward for the industry.
Yeah, what comes next now is so interesting. You know, we kind of wait. Obviously, you're watching tomorrow, and the trades will be, you know, laser focused on that. But just how demand shakes out for these new products, kind of where the demand comes from, who the winners are, you know, besides the ETF issuers. I mean, is it Coinbase? Is it Robinhood? And then as you skip forward, it's so like, let's say if you were a few years out, if you're interested in owning Bitcoin, is it people owning it through the ETF, or is that how most people will do it, or the underlying asset, you know?
Something else I'm going to be watching, guys, especially hearing some of the warnings that that Gary Gensler and the other SEC commissioner are still doing, is are we going to see cybersecurity attack attempts on these products if there are more people in them, if they are dispersed among different trading platforms? And what's going to be the outcome of that? And that's also going to be a test for the industry as much as how much they get in fund flows and in volumes. So this is only the beginning.
Oh, yeah.
It is.
Much more tomorrow.
We'll see what the future holds.
Yeah, exactly. All right, that'll do it for today's Yahoo Finance Live. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. And hey, be here at 9 a.m. too. Shauna will be
back with me and you tomorrow at 9:30.
Exactly. I'll be here also. Have a great one, everybody.